will explain, in these years, he covered a lot of crypto business as well. So it's the link between the old and the new. So Simon, thanks a lot to come here.
Hello everybody. So I've got a very croaky voice. I'm in the midst of a tour from Milan, Switzerland, then I head off to China, then Korea, and I've been suffering the whole way through, so hopefully my voice will last through. But what I'd like to do today is actually let you know that although security tokens may seem like a new topic, there's actually about 10 years of history behind this stuff, and I'd like to share with you some of the history that probably not many people know, because it all happened behind the scenes. And it really began with a journey. I was working in investment banking, and I left in 2006, and just so you know, we're streaming live, so I'm not listening to music on my AirPods at the moment. But we're trying to stream live at the moment, so we're putting the microphones together. But I left investment banking in 2006 because I believe that the financial system and traditional money is one of the largest regulated Ponzi schemes that we've ever experienced in human history. And I believed back then that there was something really bad about to happen. So I started presenting everywhere in the world that would listen. And nobody really cared, and nobody would listen. I remember getting chucked out at different universities for telling them different economic models that was different from what I learned at university when I did economics. Let's see if this slide changes. Yep. And this was me. I was a market maker at the time, trading on the traditional stock market. And it was just really, really boring. Making my little buck for the traditional markets, and I decided to write this book called Bank to the Future, and I decided just the only way to do it was to actually quit the bank and leave and just take a leap of faith and throw in the corporate towel. So this book, Bank to the Future, laid out the flaws in the financial system. The English version of it, the very original version, talked about 3 flaws in money. I don't want to go too deep into those, but those 3 flaws, just so you know, is that when you deposit your money at a bank, the bank becomes the legal owner of your money. When the bank becomes the legal owner of your money, they spend it as they wish, and they dictate the flow of all the economy based upon where they want to lend that money. The 3rd flaw is that they are actually the creators of money, and they invented a digital currency long before Bitcoin. And that was a digital representation of fiat currency that the governments were creating. But it was built upon a Ponzi scheme because it was all built upon debt. And so the only way to grow the Ponzi scheme was to get more consumers to take on more debt to increase the money supply. And when they were maxed out on their credit cards, you get more businesses to take on the debt. And when they max out on their business loans, you get the government to take on more debt. And when they get maxed out on their loans, you get the central bank to step in. And then you have to have radical banking reform. And I believe in the next 2 years, we're going to see radical banking reform. And it will be something to do with what we're seeing in blockchains. But in 2007, that's myself and my wife. She's here today, Bliss Dixon, the co-founder of Bank to the Future. And we stood outside Westminster trying to get people to listen to our message that there was problems in the banking system, but nobody was interested. We were at the end of one of the largest bull markets in history, and nobody believed that there was anything wrong with the financial system, apart from a few outspoken people. We were part of a movement before the Bitcoin community came around called the Monetary Reform Community. And the Monetary Reform was literally a group of people that just gathered in a few cities. And you could only ever attract between 20 to 30 people. So we tried to grow the community of the monetary reform movement. Then the financial crisis happened, and suddenly in 2008, when I gave a talk, we'd have hundreds of people turn up to those talks because people started to think there's actually might be something wrong with the banking system, and there might be some truth to the fact that this Ponzi scheme needs fixing. The problem is that governments and politicians didn't see a Ponzi scheme. They saw regulatory reforms in order to try and patch up the Ponzi scheme. And they've continued to implement regulatory reforms to patch up the Ponzi scheme. And they still keep it alive today. And then something strange happened. In 2009, I was interviewed in this documentary on how money is created, a topic that nobody cared about. And it was called 97% Owned. And suddenly 2 million people viewed that video, and people cared about how money is created and the impact of monetary policy on everyday people, because people were starting to experience in the real world that they were losing their jobs, that there was something really problematic with money. And you'll notice in 2009 that happened. So in 2010, Bliss Dixon and myself decided that we wanted to actually create a bank. And the bank was going to be what we were calling a full reserve bank. The problem was that we went around to all the regulators and told them that we want to create a bank that's not built upon a debt-based Ponzi scheme. And when we told regulators that, they said you have to build it upon a debt-based Ponzi scheme. Because there's no way of doing this without the debt-based Ponzi scheme. They didn't use those words, but that's essentially what they told us. They even told my wife, Bliss Dixon, you're not the type of person that we would regulate to start a bank. They told me that you need to get a CEO or an executive that's already a part of a bank in order to do this. And they wanted us just to create a standard bank. We got so frustrated at the time that we decided to start looking at different models, and I spoke at, there's a video on YouTube of my talk in Occupy London, and the financial crisis started to get lots and lots of attention, and a gentleman came up to me, and his name, I've still got the Facebook message, he messaged me on Facebook, his name was Johnny Bitcoin on Twitter, and he told me how he'd sold his house and moved into a squat on Old Street in London in order to put all of his money and everything into Bitcoin. And he moved in with this person called Amir Taqi, who was a very early developer that was developing upon the first iteration of Bitcoin. And we started looking into it. Because I was writing the next draft of the book Bank to the Future, I decided to look at it quite deeply. And at the time, we'd invested all of our money into trying to build a bank, and we didn't have anything left. But this guy put together a conference in Prague, which was the first Bitcoin conference in the world after the New York one in Prague. And we decided to scrape together our final bit of money and go to this conference in Prague. And here is the very first Bitcoin conference, there it is. And we were presenting as concept of Bank to the Future. What we had decided to do was flip our business model slightly. We realized that there was no feasible way of creating a bank without it being backed on a debt-based Ponzi scheme. And there was no way of doing a non-fractional reserve bank because everything's built upon this system and there's systemic risk in the entire system. A lot of the innovators at the time, they were building things like peer-to-peer lending, but it was all built upon a debt-based Ponzi scheme. So even when you could create a sustainable model, you're still built upon the fiat money and the fiat system. And so we decided to scrape together our final bit of money and go to this conference in Prague. And we were so inspired by the people in the room. There was about 20 to 40 people in the room. You could only call them computer scientists and activists at the time. Yeah, we presented, we were so inspired. I gave a talk on the difference between Bitcoin and banking. And the fact that with Bitcoin, you can earn your own money. With a bank, they own your money. With Bitcoin, you could spend your own money and dictate the flow in a peer-to-peer electronic cash system. With a bank, they dictate the flow and they give you permission to use your money as long as they're happy with how you want to use it, and you provide everything you need in order to use your own money. And if they make too much risk with that money, then they'll just bail it in and take it from you, or they'll go to the government if they take too much risk and ask for a bailout. They also created a system whereby it doesn't reward the saver, it rewards the debtor. With Bitcoin, it rewarded the saver. If you save and as the utility of Bitcoin increases, then it's designed to be a deflationary currency where the value goes up over time as long as the utility increases. With traditional money, the value of your money goes down over time as the utility increases, because it increases the level of debt, which increases the money supply, which deflates your savings. And so you have to work harder and harder in order to put more money into your savings. So it was a complete counter-cyclical force. I was very skeptical about whether Bitcoin will work. My wife was a lot more bullish. She was truly inspired. We decided to use the platform, with the brand that we built at BnkToTheFuture, to fund the next generation of businesses that were building financial technology. So a company was pitching at the time, a guy called Tony Calippi was pitching a company called BitPay. And we decided to later invest in BitPay. And we started working with the regulators and said, well, if we can't build a bank, what if we allowed people to invest online? And we started to look at the disruption of the private equity industry and the venture capital industry. And there were 3 of us at the time that were trying to do that. We lobbied the UK regulators. They were called the FSA at the time. They're now known as the FCA. In order to make some changes in the law, in order to allow people to invest online in venture capital. And those laws led to a real big change within the UK economy at the time, because more and more things, and this title came along called equity crowdfunding. And lots of businesses in the UK were getting funded through this when banks weren't lending. It started to actually get the attention of how you might be able to drive a recovery in the economy if you fund lots of businesses rather than getting people into credit card debt and personal debt and building a whole economy on property, real estate price increases. And suddenly in 2012, people started to care about this thing called Bitcoin. I was suddenly invited to TV shows. Max Kaiser was the first guy that actually talked about Bitcoin on a national TV show when it was $3. During the conference, the price of Bitcoin crashed from $30 to $3 in one day. 90% of the value lost. We also went to an after party, and they were selling, they had the first version of a Bitcoin ATM. They had a QR code, and you could buy a Mars bar for 1 Bitcoin. And suddenly, look, the TV started to get interesting, this is one of my early CNBC interviews where they were trying to crucify me for believing in this thing called Bitcoin. Where's the price on this? I think it was he was talking about how the price has crashed below a couple of $100 or something like that. Can't remember the timeline on that interview. I gave this talk in 2013. It's a TEDx talk here. At the time, we were really working with the regulators to try and get this platform, BnkToTheFuture, up and running. We played with them for about 4 years. They made all the changes in the laws. We created something called the UK Crowdfunding Association to try and get the industry together to make the changes. But they eventually did, and they made those changes. But the challenge was that we wanted to fund financial technology and banks and companies that were actually going to build non-Ponzi scheme-based banks and companies that were going to build things that would support the Bitcoin ecosystem and community. There was no crypto industry, it was just Bitcoin at the time. And so I gave this talk in 2013 on the future of the markets, lots of the different technology. You can still get it, it's all on YouTube, all the archives. Started talking about things about how Facebook was going to become a bank and use this technology. You can check out some of these videos, it's all there. Ridiculed again on many of these different topics. I think it was in 2014 then that we started to realize that our platform, the authorizations we finally got after 4 years of trying to explain this to regulators, they allowed us to go live, and we got one of the first registrations with the FCA in order to fund UK businesses from UK investors only. We couldn't do it globally, we couldn't take on overseas investors, we couldn't work with offshore companies. But we want to support the Bitcoin community, so we searched around and there were no UK Bitcoin businesses. And there was no one in the UK that we knew of, apart from a very small group of people that were willing to invest in any of these companies. So we had to start thinking about a global structure. So here was my next TEDx talk in 2014, where I talked about how blockchains were going to be used to disrupt capital markets. And some of our early customers were creating these things called token sales. At this time, there was a lot of talk about colored coins and how Bitcoin could be used in order to create assets. And so I gave this talk about how the entire financial system, from startup through to IPO, would eventually be disrupted through these different technologies. That one's still on YouTube, you can check that one out. And in 2015, we decided that we needed to leave our home, and we personally moved to Hong Kong, and register with a regulator that could understand global finance a bit more, and had the risk appetite to look at a different technology. So we deregistered from the FCA in the UK and re-registered with the Cayman Islands Monetary Authority, and it took a bet on us. And BnkToTheFuture was born. In 2016, something really interesting happened. So we started funding some of the really early companies, Eric Voorhees through his Shapeshift, Bitstamp, many of the different early companies, BitPay, Coinbase, Ripple Labs, different companies that were doing lots of interesting things. And in 2016, Bitfinex, as Paolo talked about earlier, experienced a hack where 119,000 Bitcoins were stolen from the exchange. Now we saw the effect of what happened when Mt. Gox's coins were stolen. And we got on the call with the board at Bitfinex and said, we think we can help you launch a model whereby you can convert your tokens into equity in compliance with securities laws, because we've got the securities registrations needed in order to make this happen. And so the Bitfinex team created a really, and we had, at this time, we built quite a community of investors. I think we had about 20,000 high net worth investors that were looking at investing in the industry. And Bitfinex in 2016 created what I call now, it wasn't called that at the time, but the very first security token. And it was one of the most outstanding stories in history that I believe will be in economics textbooks in the future, that is very misunderstood. And the credit of what this actually did should be known, because I think I see a lot of people join crypto and they kind of rewrite history. If you joined at certain stages, you might not know. You might have joined at the Ethereum stage, or you might have joined the ICO craze, or you might have joined, it depends which phase you join. You come with a new perception of what crypto markets are based upon the market, and there is nothing I have ever experienced that 10 years ago, since leaving investment, whenever it was, being involved in this industry, there's not one day where I'm not surprised and amazed by what actually happens in this industry. It is the fastest moving environment and exciting space I've ever seen that has so much potential to impact and disrupt a multi-trillion-dollar regulated Ponzi scheme called fiat money. Bravo. So in 2016, Bitfinex had this idea. They said, why don't we, we know that we are bankrupt right now unless we do something in the next few weeks. So they decided to haircut everybody's balances, an extremely unpopular decision at the time. And they took everyone's balances and realized that, the price of Bitcoin at the time meant that they were $72 million in the hole. The effect of Bitfinex going bankrupt at the time would have systemic risk on our industry and hold us back. So when they launched the token, everybody logged into their Bitfinex account, and they had, about 72% of their normal balance and some tokens that were built upon Bitcoin using the Omni protocol. And immediately those tokens started trading on the market. So Paolo told the story earlier. They crashed down to about 20 cents. But they became the very first prediction market built upon a cryptocurrency for your belief in whether Bitfinex could recover from this situation. And the most skeptical people could sell all their tokens for 20 cents and be done with it and get rid of the whole situation. The other people could hold on to those because Bitfinex promised that they would repay $1 if they could ever get out of this situation. And we opened on BnkToTheFuture an equity funding round whereby you could take your BFX tokens, and no matter what the price was of those tokens, you could convert them for $1 of equity. So you could buy them for 20 cents on the market and buy $1's worth of equity at the valuation we set at the time. So there was an 80% windfall if you believed, because it was hugely risky. We knew what happened to Mt. Gox. You know, it was risk at the time. We were comfortable doing it because we met the board of Bitfinex. We saw the ethos and values of the team. We believed in what they were doing and that they had encountered an unfortunate situation. So we decided to launch this equity round. At the same time, we launched a round for something I'll end this presentation on, an equity round for a gentleman called Kim.com, who was also going through a very challenging situation and wanted to launch something based upon Bitcoin that he believed could change the world in terms of the future of internet freedom. And so we had these two very risky deals at the time. We were recently, you know, we'd had our restructuring. And thankfully, you know, this story ended well and led to where it is today. But as people started to believe and recover, as Bitfinex relaunched himself in an amazing turnaround like I've never seen before, they started, the bull markets, everything lined, the moon aligned and everything went right. The bull market started to come through. They started to pay down their debt. As they started to pay down the debt, the price of the token started to go up, and people started to realize I could buy this at 50 cents per $1 worth of equity, or I could just trade it on the market. So more and more people started accumulating the tokens. They started getting rid of more and more, burning those tokens as they extinguished it and repaid the debts. And eventually it reached the stage where it was trading at a premium because it really looked like Bitfinex was going to recover from this situation. And $55 million worth of the tokens were converted to $55 million worth of equity. And it was just one of the most incredible stories that will go down, and it completely changed and disrupted the path of liquidation proceedings. Those that lost their coins in Mt. Gox still don't have them to this day. Still fighting. Lawyers, accountants, auditors, all fighting, all getting paid, all taking away the potential of what could come back from this. Yet Bitfinex did this and turned it around, and everyone was whole. And in fact, it turned out for some people that they could invest at 20 cents, get $1 worth of equity. The equity went up immediately to a lot, you know, much higher valuations on the secondary market, and they started to repay all of their profits as dividends to those shareholders. And it actually outperformed Bitcoin as an investment if you invested in Bitfinex at the time. That was what I call the first security token, and that really set the stage for what's possible. And I don't think the real potential of security tokens is taking what already works and creating a blockchain version of what already is what is happening. The potential is in doing things that were never possible before, and that's what's really exciting about today. In 2017, BnkToTheFuture started to get disrupted. All of our companies that were selling shares, by this point, we had a portfolio of pretty much all of the major companies in crypto. And one by one, we started losing all of our customers. So a couple of customers would ring us up and say, sorry, Simon, I'm going to be issuing a token. We're not doing that equity raise anymore. And one by one, we started losing all of our customers. So the ICO market started to disrupt the equity market. No one wanted to sell equity. No one wanted to buy equity because you could immediately trade it in the market for 10x what you bought it for. And we entered into one of the biggest bubbles that we've seen, the biggest bubbles in crypto that we've seen. During 2017, we decided that it was time for us to start working on, we were being disrupted, we were the dinosaur now, so we started looking at some of these new funding models. So we created a model whereby you could invest in tokens in compliance with global securities laws. We have registrations, for example, if you're investing from the US, you go via our US broker-dealer. If you're investing from EU, you go through our UK broker-dealer. If you're investing in other places, then you go through our Cayman, and we created this global structure whereby people could actually invest in securities, and created a structure whereby you could do it in compliance with securities law. We're happy to say, other than Telegram, none of the companies that did token sales through our platform ended up in trouble with any securities regulators. And Telegram is more recently, and is highly disputable because from what I can see, they did everything to comply with securities laws. But there is a political battle going on whether which country is going to launch their blockchain stable coin first, or whether Facebook's going to launch theirs first, or whether Telegram's going to launch theirs first, or whether China's going to launch theirs first, and they're all in a political battle to decide which one of them is going to own everything. And so these are highly politicized battles at the moment. We created a token called the BnkToTheFuture token. It allowed people to get access to all the deals before everybody else. We created a secondary market where you could buy and sell shares in the largest companies in crypto as long as you're a qualifying investor. And so now you can buy and sell shares in Bitfinex, SPV through our structure, Circle, Ripple Labs, various other companies, some of the largest names in crypto. And we created a way where if you paid your trading fees with BnkToTheFuture tokens, then you got a 50% discount and created a bit of a circular economy. We filed with the SEC, did it in compliance with securities laws, but still remained the utility of the token because we wanted it to be a payment token and have utility benefits. Touch wood, to this day, that argument has held so far. And we used that in 2019 to open up the secondary market where now you can actually buy and sell shares as long as you're a qualifying investor. Here's Bloomberg, they covered saying that most of the large companies. You'll notice that we don't tend to do that much marketing because there's certain restrictions in what we can do in order to remain compliant, but it stood the test of time. In 2019, here's our portfolio companies. We have over 120 different companies, and here's some of the ones that have all raised. Some of our more successful deals was Bitfinex, as we talked about. We did an Ethereum mining contract to security. We had a bit of a play on the mortgage-backed security, and we created the Ethereum mining-backed security. That was a very extremely profitable one through the platform. Bitstamp exited. They were acquired by a Korean investor and conglomerate. And obviously the highest value company in our portfolio at the moment is Coinbase, which is recently valued at $8 billion based upon their last funding round. So here's a little look at the secondary market where you can now buy and sell. We're still in beta at the moment. We haven't fully launched this right now, but you can deposit Tether or dollars to your account and you can get in there. Now what's really interesting about the market right now, checking how we're doing the time. What's really interesting about the market right now is the value of the company, if it exited, doesn't change. There is still a value in the company. But the value of the shares on our platform might trade at a discount or premium to the value of the company. So it creates a really interesting opportunity to get companies that might be valued a lot higher, a lot less, because they're actually, this isn't a deeply liquid market. It's not like Bitcoin or tokens or anything else. But also what we're doing is we're now iterating out into the security token market. So we launched the BF wallet. We now hold all this equity in all the largest companies in crypto. We're not sure whether people want to buy those as tokens because really in order to do it compliantly, you still have to do all the KYC, all the sanctions checks, all the PEP checks, all the accreditation, all the certification, all the registration with local broker-dealers. And so what we decided to do was take the processes that we built up for approximately 6 to 7 years and create a BnkToTheFuture identity solution whereby if anyone wanted to issue a security token, everyone could register through regulated broker-dealers and all the compliance was just taken care of in a really easy, fast way. So we started experimenting with, we launched the BnkToTheFuture wallet, which is a wallet for security tokens. We issued our first security token through it, and we started looking at integrating with the BnkToTheFuture identity solution so that we can start to build the ecosystem for the next wave. So we obviously won very big, firstly from Bitcoin, because Bitcoin, the value proposition, the company was a holder in Bitcoin, so we didn't need to do excessive venture capital rounds, and we didn't need to deviate from our mission and goal. We didn't need to take on loads and loads of companies and try and create a scalable startup or anything. We were just here to support the industry and do what we can to help this industry grow. And cryptocurrency exchanges were our second big winner. I believe that the third and fourth next big winner, we like to invest in things about 4 years before they become a thing. I think the next one is going to be the lending markets. I think it's huge potential in terms of the fact that you can now take your dollars, you can exchange it for a stable coin, you can get interest rates that you can't get anywhere else in an environment, and you can collateralize it with your Bitcoin so that you don't need to sell it, And it's just such a fascinating industry. Really, really early, but I'm predicting that will be the next super growth market. I can't give financial advice, so please do your own research. We just provide the opportunities, you decide what you think is right. We've had losers along the way, we've had companies go bust, we've had ones that have not performed anything like they were supposed to. So this is a two-sided market. The key is diversification. If you believe that this is a disruption of a multi-trillion-dollar industry, then you want to be diversified very wide. The Bitcoin investment proposition is obviously very different. This is our world's best shot that we've ever seen at achieving sound money. There's nothing else out there that can achieve sound money, because of the unique properties of Bitcoin being created at a time when nobody cared, from people that no one cares about, that people still claim to be that person and no one cares. Today, the dynamics are very different. If you are a centralized company and needs to do this, you need to think of securities laws, you need to think about money service laws, you need to think about all sorts of stuff, which kind of deviates from the proposition of what is created here. But Bitcoin is, in my perspective, statistically too important and too big to fail at this stage. I believe that utility of Bitcoin can only increase with every Ponzi scheme financial crisis that we will see. And I believe that it is actually going to be more and more of an impact, not just in the proposition of creating an economy based upon savings. 18 million Bitcoins have already been created. There's only 3 million more to go. And I believe that they're going to be rarer and rarer and rarer. The market's tanked today creates opportunities because the people that believe that Bitcoin is a Ponzi scheme, a scam, and a currency just for drug dealers are creating one of the most amazing opportunities to buy what I believe will be one of the most important inventions and things that can actually have such a big impact in creating the ability for people to exit from the traditional financial system and also keep the traditional system more honest. Central banks are going to launch all their digital currencies. They're going to let banks go bust. Banks, they're leveraged to the max. But they're not going to let you lose your money when those banks go bust. They're going to replace your money with a digital currency issued by the central bank. And you're going to take your balance that you had in your bank that will no longer exist when it blows up in the next systemic risk event, and you're going to exchange it at the central bank for the same balance, and they're going to issue a new digital currency. Every central bank in the world is building such a system as we speak. Not only that are they going to do that, it's going to be a really, really horrible version of fiat currency, because you're going to be in Switzerland, and maybe you're contracting with someone in America, and maybe you get paid while you're in China, and they're going to automate tax collection, and 3 governments are all going to try and take the money out of that, and if you don't pay it, all 3, then your passport's going to get switched off, connected by a blockchain at the border. It's not going to be a pretty world. But thankfully, Bitcoin comes along and gives people an exit and an opportunity to exist outside of that system and keep that system more honest. In a sense, now there's competition amongst countries and financial systems. It regulates the regulator. And we've never solved that problem of how do you regulate the regulator. And Bitcoin does that by giving an opportunity for them to keep their system more honest, more competitive, because people have a choice now for the first time in these monopolistic systems. I'm just going to leave with a final, I think, is it called, have I got 5 minutes left?
Oh yeah.
Okay, I'm just going to leave with a final deal that we're currently working on right now with the Bitfinex team as well. There's a gentleman that you may or may not know. His name is Kim.com. And Kim.com was an early internet entrepreneur that created a product that attracted 4% of the entire internet traffic because he solved a very simple problem. And that problem was, I don't know if you remember when you first tried to open up an email and you found a video or something that you liked and you uploaded your photo and you send it and then suddenly you get your failed delivery report because the file size is too large. Well, he took that problem and created a solution to it. Now we know common things like Dropbox and Google Drive and all those things. But the business grew so fast that within the first day they had over 1 million users, and people started uploading to this service called Mega Upload pirated videos and all sorts of copyright infringement content. And it grew so fast that they couldn't police it. So they created a back door whereby Hollywood could put in a request to take that content down. But Hollywood didn't like this, because all of a sudden, all of the stars, if you watch some of the videos, like Kim Kardashian and Puff Daddy, and there's videos out there of the Mega Upload launch, where all of these Hollywood stars saying, we can take out the middle person, we can set up, we love Mega Upload. And so Hollywood launched a campaign and lobbied the feds, and Kim.com was raided, and the feds took it down. He had a very hard battle, and a couple of years later he decided to take the same service and change a few lines of code. He encrypted the contents so that the internet service provider, the next company, it was called Mega.NZ, did not know what the content was. So therefore the user was liable for if they were making a copyright infringement rather than the internet service provider. And he created one of the most interesting cases where it turned out in New Zealand, where he was based at the time, that the internet service providers cannot be held liable for the content of their users. Excuse me. So the second iteration come along, and it's still live today. Mega.NZ has 180 million users, and just by encrypting the content, it was perfectly legal, and they weren't responsible for any of the breaches from their customers. The issue was that in order to maintain that, you had to give up some privacy. They knew who the people were. And so Kim.com now came to us in 2016 and said, now that Bitcoin exists, what if you could take an encrypted payment and put it inside an encrypted file? Then you could create technology that cuts out us, cuts out all the middle people, and allows people to have more protection over their content and unlock it using a cryptographic payment. And he launched this platform called, where he started to get a funding round for a platform called K.IM. The second version, so every company he's created has gone on to, it's been viral, had millions of users. And the next version of the platform is K.IM. Now the interesting thing, and I will finish off, I promise, for the panel, is that in 2016 when he did this, he wanted to support Bitcoin adoption. His idea was that we could take millions of users in the Hollywoods and the industry and everybody, and we can get them rallied around again, because he does these crazy launches. He could help adoption with Bitcoin was his idea. Bitcoin became bigger than him, obviously, but that was his original idea at that time, to try and help adoption. There was a scaling debate. The model that he needed to use in order to service hundreds of millions of cheap transactions, which was what he was trying to build for, was unfortunately not, we were having some scaling issues at the time. Went around in a few circles, he started looking, the Ethereum community said build it on Ethereum, started looking at that. Then the Bitcoin Cash community said build it on Bitcoin Cash, started looking at that. But then he went full circle, and we introduced him to the Blockstream team, and they started to show how you could build a liquid token, and then Lightning exists, and our roadmap for the next year puts liquid and Lightning together, and now you can have liquid tokens which have all the speed and lower costs, but with the security of Bitcoin. So really it's a perfect storm that's coming round. These technologies are not quite ready. There's probably another year until this can all come together. But he decided to, we introduced him to the Bitfinex team, and the Bitfinex team decided that it was a worthy goal to support. In one of the toughest markets in crypto right now, the Bitfinex token sale is launching the K.IM platform, and that's going to be live in a few days. So I just wanted to put that out there. And that's all I got for you. I think we move over to the panel. Thank you.
A lot of people talking about the central bank money and the big brother that will control everything. So I hope it will not happen soon.
I don't mean to scare you, because actually I believe that we live in one of the most interesting times in human history. This is the most exciting time to be alive in financial history. You are all going to see more change than anyone has ever seen. And you're at the forefront. You are an early adopter even today, being in this room. I thought we were an early adopter back then. But you're still early adopters. Most of the world have no freaking clue what's coming. Everybody in this room is an early adopter. And it's one of the most exciting movements to be around, that now technology can change and have a reversal effect on all of these major, major problems that are going to hurt a lot of people. So this work is really important, and I believe everyone in the room can contribute in their unique way to what I believe is one of the most important times in changing times in financial history.
Yeah, but I think that if the tokenization of all the assets will happen, not all the people will take advantage of that. Only as all the business, only a small portion. So like in Bitcoin, who was believing in Bitcoin in 2009, 10, 11, up to 2017 or 16, I think is quite happy. All the others, so the big amount of people that entered in December, they did not take any advantage right now. So
Sure.
the tokenization of the economy will move value from fiat currency to token. This is my view. And this means that if you remain with fiat currency, slowly or not slowly, you will lose your money, your savings. And a lot of people will happen that. So think about your father. So people, old people around the world that they don't have any idea what's going on, and they keep still their $100, thinking that the value is $100. So for them, it would be a disaster. So I hope that as I did for Bitcoin and in the past with other deals, we are here try to take advantage of this big opportunity.
Absolutely. And that was one of the, like for a Telegram, for example, that was 1.7 billion of traditional money in US dollars that will be exchanged for a token. And once you're in the token economy, you don't go out. You tend to convert it to Tether or Bitcoin or trade around. But it's very sticky once you're in. The onboarding is the pain point. Once you're in, the offboarding is so painful that you tend to figure out innovation to stay in. So it's all of these tokens are sucking more fiat into the digital token, into the digital economy. And as long as those...
I am one of the investors of Telegram, so I cross my fingers.
We'll see. Yeah.
Something happened.
These are controversial subjects. You know,
Exactly.
Building technology has become dangerous.
Okay. Thank you, Simon. Now, I hope you enjoy, but I really hope that the last session should be of interest. We try to put together a few questions between economy and crypto, and with the panel of all the speakers that I invited to come together with Marina. Marina so we had all speakers were male. So we need somebody, and Marina is I know her now is from 2010. So she was private banker. Now she worked for the Camera di Commercio Italo-Svizzera, and on her LinkedIn, I found out that she tried to write a lot of things about blockchain. So I explained my project. She was very excited. Unfortunately, she had another job, so she doesn't. But she will follow very carefully what we are doing. So I asked her to come here tonight and to ask some questions to the panel.
We need a chair.
Sì, spostiamo il tavolo dietro e ci mettiamo davanti. Scusate. Ok, ok.
Decentralized.
Ok, sì. Eccolo qua. Zao, come on.
More space you can use.
We have too many speakers. Okay, you say.
Okay, good evening everyone. Mic on. So I'm very happy to be here today. Thank you, Paolo. And I prepared some tricky questions for you tonight. So the first one, talking about security tokens, stable coins, countries facing multiple difficulties like Venezuela, for instance, negative interest rates, increased controls and requirements. What do you think is a potential driver for crypto markets growth? Who want to answer?
Okay, I start. Okay.
You start. Thank you.
It's quite a difficult question because I think that all of them can be a good driver for the big adoptions. However, I hope that will be the poor country where there will be a big devaluation of the currency. So they have an obligation to buy digital assets and gold. So I think this will be quite important to see, and we need to have a financial crisis in order to, in these countries, and Europe, all the countries can be involved, you know, not only, so maybe Europe will be one of the last together with other strong currencies, but if we have a devaluation, people will start immediately to use token.
That is also a little bit my point of view. In order to answer your question, we need to do a geographical differentiation. I don't think we will have the same approach to cryptocurrency or implementation of cryptocurrency if we compare Switzerland with Venezuela as an example. So that's practically what Paolo was saying. There will be an event which could be different in different countries, which will trigger the use of cryptocurrency. In Venezuela, probably it's inflation, which we are already seeing now. In Europe, a crisis, inflation. Let's see what's happened.
In 1648, the Peace of Westphalia created the nation state. And it was a feudal creation. It still maintains its feudal instincts. And it is working hard to make sure that we cannot escape. As a demonstration, renouncing your citizenship in the United States is becoming harder and harder. A larger percentage every year of citizens is unable to afford the economic and bureaucratic cost of escaping the United States. Now, you would think that more people want to enter rather than escape, but I think actually it is a very, very interesting indicator of the nation states losing its grip. And a lot of the effects that we are seeing is a panicky reaction to technology disrupting this balance. And together with other changes, such as solar power, we are building a new socio-economic organization. And crypto is the catalyst of this. And we are all part of the phase transformation.
Yeah, I agree with David that nation state will be the main driver for the adoption of Bitcoin and other stuff around Bitcoin for two reasons. The direct reason is that the job of the nation state is to devalue, basically is to debase and inflate currency, because that's a tax, right? Inflation is a tax. They want your money, they come to your house to take it directly, but they also take it indirectly by just devaluating the base, the monetary base. So that's their job, stealing value from fiat money. And the second one is to censor and track and control and spy upon transaction in order to steal your money more directly with the normal taxation. So the interesting theory about nation states is that either they stop the inflating money and censoring transactions, and then we win because we can use whatever we want, or they go on and then we win because they are basically promoting Bitcoin for free. So Bitcoin Bitcoin's main sponsor are nation states trying to censor transactions to inflate money. Of course, there is also the other Bitcoin-ish like national Ponzi schemes like Venezuela's Bolivar. They can use a Bitcoin-like marketing in order to replicate the Ponzi scheme or even increase it. For example, you devaluate the Bolivar again and again and again, then it's too much, and so you just issue the Petro in order to inflate even more. So, so cryptocurrency would be a marketing flavor for nation states to inflate even more or to track and control even more using the blockchain transparency. And on the other hand, it would be basically Bitcoin taking advantage of the fact that the state is making it for normal people impossible to use what money is supposed to do, which is storing value for generations, not having it devalued by the state, and moving value across unknown people without any kind of KYC. If we wanted to transact with people with KYC, we could just use barter. The reason you have money is that barter doesn't scale, and you have to be able to transact with your enemy, to transact with somebody you don't know. That's why we have money. If you know your customer, you don't need money.
So today is actually, it's a really important time in Bitcoin's history because we're about to find out whether Bitcoin can stand up to its next test. And that is that Bitcoin is what many people call Bitcoin a store of value. It's not a store of value, gold's a store of value. Bitcoin is what I call a speculative store of value. A speculative store of value means that there's massive gains to be made if you speculate that Bitcoin could become a store of value. Because a store of value preserves your wealth, not increases your wealth. So gold has got 5,000 years of history of preserving your wealth. Bitcoin has made a mountain of wealthy people. And so a speculative store of value is where it is right now. Now, because most of the world still think it's a Ponzi scheme, a crazy thing, a currency for drug dealers, and a scam, that creates the opportunity for someone who believes in that before it becomes a store of value to profit from the price discrepancy. And that's the opportunity with Bitcoin. And what we're about to see right now is one of two things. There's going to be a systemic risk event, there's no doubt about that. Who knows what it will be? The last one was, this small little island called Iceland that investment bankers took over and killed. And that created a global systemic risk event after a subprime Ponzi scheme. There'll be another one, take your pick. We've got credit card debt, we've got student debt, we've got little economies, tiny little economies. The economy is so fragile, the financial system is so fragile, that it's going to take one of these little systemic risk events, maybe it's the Hong Kong riots, whatever it could be, no one's going to forecast the politics. And one of two things are going to happen. Either all of the markets, the real estate markets, the bond markets, the stock markets, go through a correction, because they've been built upon the quantitative easing Ponzi scheme, and Bitcoin goes up as a hedge because people have an exodus where they put their savings into gold and Bitcoin as more a speculative store of value. Or people are going to say, well, Bitcoin is too speculative, I can't afford to invest in a speculative asset right now, and it all goes down together, in which case we've got to probably wait another 3 to 4 years until Bitcoin starts to prove itself store of value. I'm not sure. I believe, and over the years I've been the world's worst predictor because I've been bullish the whole way through every crash. But we're about to find out whether Bitcoin is ready to hit that stage. And if it doesn't, it will do eventually, but you're just going to have to be more patient because there's only over 21 million of these things. 6 million of them are probably disappeared and never going to be found again. It's going to be more and more useful to more and more people, as we've seen, based upon the user experience of traditional money making really problematic situations, whether it's cash illegal in India, whether it's bail-ins in Cyprus, whether it's the war on money laundering in America. All of these things create these horrible user experiences of money that drive you to find alternatives.
Another thing that I want to integrate is an important thing is the real estate assets. So with the cryptocurrencies, you have two kinds of avoiding in this analysis the utility tokens. You have the Bitcoin from one side and the real estate assets, the real assets backed tokens on the other side, like Tether, like Icon Gold. And for solving this problem in this currency, in these countries like Zimbabwe or Venezuela, you need to attack these unbanked people, in my opinion. That is, in Africa, 82% of the people not have a bank account. And they need currencies that is backed, that is collateralized by something that is value. But for becoming a currency, a crypto should be, in the history of the currency, if you analyze how a currency, spontaneous currency is developed, has been developed, it should be collected before exchange, before traded. And for collecting these, they should start to collect these real estate assets token backed. the real assets tokens. And it's important to attack these 82% of people unbacked. This is.
So I think that there will be probably another global financial crisis. Student loans are pretty terrible in US. So the thing that I hate the most is that there is a big tax on everyone that want to study. And education culture should be never used, right? So something like that will eventually explode. People will be really, really angry, will be pissed off by this continuing big scam that is the global economy, and eventually we'll get there. I mean, I don't even worry if the price of Bitcoin goes down. It's another way for another opportunity to get more Bitcoin, and it's another opportunity for other people to get into Bitcoin. So eventually we will get there, maybe 1 year or 10 years. I really don't care if my children can have it. If it will be useful for machine learning, fine. I'm not in a rush. I think that is the only way out eventually. So,
yeah, I think the traditional financial system took too much profit from real economic. You can see the biggest companies. The Chinese biggest company is ICBC. They make too much money from the. So I think if the financial system took too much money from the real economic, so the real economic cannot make money, and also money itself, the fiat money is not true wealth. It's people who people's work create the real value. So. So I think, for example, my brother is raising pigs in my hometown. He's still paying 3% interest each month, but it's not normal for a normal business to pay such high interest. The interest was taken taken to the financial system. So my hope is, or I think blockchain should build a new finance system to lower down the cost as low as possible. So this could improve the economy, because without the value created by real economic, financial system has no value at all. Yeah, that's my point. Thank you.
Okay, thank you very much. So let's move on to our second question. Talking about America. Does America really have control over the financial industry today? I'm referring to recent cases like Bitfinex, Poloniex, Telegram. What do you think? What's your opinion?
I'll give a really short answer. America will do whatever it can to keep its control and improve it. And these cases are really, really important for the future of proving that there is a world outside America. And these cases are more important than most people think.
The Prime Minister of New Zealand had to apologize to its citizens because of the raid against Kim.com, a New Zealand citizen whose home was raided during the night on behalf of the Department of Justice in a foreign nation. So not only the US has jails and arms and thugs, but they will deploy them directly or indirectly all over the world.
I think that when you talk about places like America, you have to distinguish the geographical zone and the people living and working and producing wealth there from the government which is controlling that kind of reason. The American government, as we just said, is probably right now the threat number one of the attacker number one, of course, is the one government wants to regulate all the global finance. And but the point is that there is also the American society. I mean, try to impose a cashless society in Texas villages. Good luck.
Yeah, well, we are seeing that on our own skin. I'm not sure, probably if my lawyer was here in this room, he would punch me. So I think that anyway, you can see the what is happening to two companies like Bitfinex and Tether that since at least 2 years decided to not do business anymore in US, and still we have kind of problems with America. So go get your own conclusion from that.
So Paolo, you can say Bitfinex can make America great again.
I get sued from Trump to steal their business.
Without that, I don't think liberal has their idea.
Yeah.
So let's explain it from a Swiss point of view. We are the country which has to feel on its own skin the so-called US tax program. So for those who doesn't know what the US tax program is, the Swiss banks has to do an analysis of all the clients they had, and that they had some US person. And I remember that even someone which is born in Switzerland, living in Switzerland, but for I don't know which reason had received a green card 10 years ago, is a US person, has to pay taxation in the US. We have to pay some fine for all these people. So that was a huge procedure that we have to do to take the US government come down and not doing any procedure against Swiss banks. So I think this is a proof that the United States, I mean, they can really track everybody around the globe. But I think we have also to understand what they do. They are protecting themselves. I mean, they did the US tax program in Switzerland because they say, oh, you have the money of the US person which are not paying the taxation. But on the other hand, we know that every South American is having non-declared tax banking account in Florida. So it's what they do is just look also for the crypto. I mean, they open a procedure against you, against Telegram, against a lot of companies. But they have Coinbase, they have Bitcoin. I mean, they have a lot of companies which are doing cryptocurrency business in the US, and they're protecting these companies.
They are strictly regulated, but at the end, for example, Facebook or Apple have their headquarters in Ireland. I mean, I think that the regulation will be adapted to technology. They cannot, let's say, stop everything forever. I mean, in years, they should be more worldwide. I mean, open. Otherwise, they will not have the primate again from technology side, because it's really hard to choose the United States as a country, as a headquarter. You can analyze also, for example, the crypto companies and where they have been established in the last years. Not too many companies are established in a Silicon Valley like before.
Yeah, I mean, Silicon Valley is the world's worst place to raise finance as a blockchain company in the world right now. So things are changing.
I think the US dollar is the most powerful. So we should not hold. We should hold as less dollar as possible, and we should borrow. We should borrow rather. If you borrow, it will devaluate. So
your holidays in New York?
Yeah, so you should hold crypto asset and borrow the asset that is devaluating, and only pay a low interest rate. Yeah, that's our plan.
I personally believe that I'm happy every time there is a problem with the United States. Okay, I'm happy every time there is a problem.
You understand how important could be the crypto, and I think that they have an incredible fear, and that's why they are trying to regulate and they are trying to manipulate the normal business and the freedom of the people. So they are at the end of the cycle.
Yeah, also, I want to say that in many user agreement that we put US, we don't allow US and other terrorist countries. Is US the biggest terrorist country? Yeah, we don't allow, yeah.
Okay, thank you very much. So,
I see a drone approaching, so we're just joking. I mean, I see
So, how do you see the future of the stable coins in the light of the latest G7 statements? I'm referring to the Libra case, the financial instability, new regulatory needs, etc.
Well, I start. I for once think that Libra is just a brilliant marketing operation, because I cannot think, I mean, you have to remember that before Bitcoin there was e-gold. E-gold was an approach to create a stable coin based on gold with a centralized company actually not in the US but with US clients using cryptography in order to transfer it without any kind of censorship. And the guy was jailed. E-gold was very huge in the e-commerce sector, and the guy was just jailed. So I doubt that people in Facebook, with a consortium with people from PayPal, they had a similar situation. PayPal, when they started PayPal, they wanted it to be the currency of the internet. Peter Thiel was saying, we created something which is not just a payment system. We created a currency which is something that the internet citizen will use instead of the national currency, with no borders, no control, just an email, and you will do whatever you want, because the nation state is one thing, but the internet is the other thing. And then they had to pivot away from that idea, because otherwise they were going to jail. So I don't think that these people in those places, I can imagine a board member meeting in Libra, and they just don't know that there is. Think about two scenarios. In one scenario, you have Facebook coming out and saying, you know, maybe when we get the license, we're going to compete with Alipay. Okay, few news and few people talking about that. We are creating a new cryptocurrency. Whoa, Senate hearing, everybody speaking about that, Bitcoin conferences and Bitcoin podcasts thinking about that. And then regulators say, no, you don't. And they say, okay, we just compete with Alipay, but with a lot of free press.
Yeah, so the stablecoin part is, it really relates to making a couple of distinctions. There's what you do with your savings and what you use as a medium of exchange. So for me, you know, I'm going to China next week, and I've had to pay about 6 contractors as part of my roadshow. And the only thing they want to take right now is Tether. The reason for that is because Bitcoin is going through a volatile market, and as a medium, you know, as a medium of exchange and unit of account, Bitcoin is just too volatile when things are priced in dollars or priced in CNY. And you know, what you receive versus what you have to pay in, people can't handle that volatility. If you can't pay your rent just because Bitcoin's in a crash, that's a problem. However, savings is a very different thing. If you're thinking about long-term savings, then to me, you know, Bitcoin is where you want to be. But eventually, I believe that Bitcoin can become a medium exchange and unit of account that you can use in everyday life, but only when the entire world realizes and knows and wakes up to the fact that it's not a currency, a Ponzi scheme, because at that point it will no longer be a speculative store of value, it will be a store of value, a unit account, a medium of exchange. In the meantime, stablecoins is the way, the fastest, easiest way of transacting globally, and they're just far superior. If I would not be able to go to China next week if I was relying on international bank wires. I just wouldn't be able to do it, and Tether saved that.
Stable coins are a stepping stone to really upgrading the global financial system. In the United States, still there is a huge business in printing personalized paper checks, which are widely used. And it is so absurd, just like you know, NASDAQ going to sleep by night, or the financial system going fishing during the weekend. But I have friends who are thinking ahead to colonizing the solar system, to capturing the wealth of rare earth asteroids, one of which is estimated to be worth $2 quadrillion. We have challenges and opportunities for which the current financial system is completely inadequate. And when in 30 years we will have swarms of intelligent robots building colonies in the asteroid belt, are they going to use paper checks, wire transfers, or credit cards? I don't know whether they will be using Bitcoin, but I am sure that they will be using something that Bitcoin is an ancestor of.
Yes. There are two kinds of stable coins. The first one is asset-backed stable coin, and the second one is fiat-backed stable coin. So the first one, asset-backed, is like an investments asset class, but it's portable. You can cross the border with like 10 kilos of gold in your wallet. And you can do the same with the fiat-backed stable coin, but it's a bit different because it's based on promise of some government around the world. And the stable coin, fiat-backed, in my opinion, should be compared not to the other cryptocurrencies, but to the electronic money. And if Libra is successful, Libra will be another kind of electronic money. So right now, when you, for example, use Revolut every day and you transfer 10,000 to Revolut, you have 10,000 of electronic money. You can have 10,000 of electronic Libra money in the future. And it could be really a good news for the crypto market, because I think that if these succeed, this electronic money could be listed in the exchange near Euro and USD.
Well, I think we have already said a lot about stable coins, and I agree that stable coin will be, something that will transfer from fiat currency to decentralized crypto. It's something that people understand better, have a much more trust. So it will build a sort of bridge between the fiat world and the cryptocurrency world. This is very interesting what is happening with Libra, because even if Libra will not see the light, he has given a huge push to create the central bank's digital currency. I mean, we know that now China is working on such a currency. Switzerland has announced a collaboration with the Bank of International Settlement for creating the crypto Swiss francs. Sweden, it's a country which...
It seems to me that the question is slightly different, in the sense that G7 started to put a lot of pressure to this stable coin backed by dollar or fiat currencies. So I wonder, and I have fear that they put a big limitation to those kind of coins, because, you know, it's quite easy today to move $1 million from my crypto wallet to another crypto wallet in China without anonymously. While these poor bankers that are in the room, every time they ask to move $1 million, they ask 10,000 questions to their customers. So what I was reading the G7 problem is that they are going to stop this kind of crypto stablecoin backed by fiat. This is my fear.
Yes, because they will do their own. They will do the official one, and the official one will be even more controlled than the current one.
I think, sorry if I step in again, but very quickly. Think about, for example, a model like Tether. Think about a future in which, I don't want that future, but in which any kind of exchange, centralized exchange, is completely regulated and controlled. And now you only have decentralized exchanges like BSQ, which are very painful to use, like everybody has to install the software. Nobody except geeks use decentralized exchanges. But if you have a decentralized exchange, the Bitcoin part is easy because it's decentralized, so you have it in the decentralized exchange. But the dollar part that you need in order for the money to move from dollar to Bitcoin is still completely bank-based, even in BSQ. So things like Tether can be used to separate the trading part from the dollar digital representation. So even if they want to restrict everything, you just need to represent the dollar liability on top of the blockchain, and then the centralized mechanism can just come in and leverage that kind of passage to build really censorship resistant or censorship hard alternatives.
For this, Giacomo, could make sense, your opinion, on DAI or not? So DAI is algorithmic stablecoin. It's not, let's say,
Algorithmic, except for the fact that MakerDAO is very centralized in the price oracle, so it's still MakerDAO is not way more decentralized than BitMEX, unfortunately, because you have the price oracle. In general, algorithmic stability is stable until it isn't. It's a very ancient holy grail, but there are a lot of systemic shocks that can just crush everything. You have a very, either you over-collateralize everything 10 times, and then nobody can use it because you need too much liquidity, or you just have this under-collateralization problem in which I think that that Tether-like coins are more realistic right now than algorithm-based.
Yeah, I agree. Also because if you have the most important part of Tether is the fiat on ramp, right? So we were looking at having an algorithmic stable coin issued by Tether, but one thing is having it gaining $100 million worth of value. One other thing is to get 4.4 billion as Tether now. So if you remove the part of the fiat on ramp, you reduce by far the utility of a stable coin.
Yeah.
Okay, so thank you very much. The last question, more privacy or more control? What do you think?
If I love the black, if I love the black woman and you were my friends and you wanted me to marry her, what is the year that in the United States we would be all criminal co-conspirators? 1960, 1965, 1966. Only in 1967 it became legal for a black and a white to marry in the United States. Now, I guarantee you that whether it is, I don't even want to make any examples, but I guarantee you that there are behaviors today that are criminal that will be absolutely legal tomorrow. And society can only make the change from one to the next, evolving, if strong privacy is preserved. A certain level of behavior that is defined criminal in a given time is necessary. Otherwise, society cannot evolve, cannot change, cannot move to be a better society. Slavery was legal once. Advocating against slavery was not. So privacy is not a question just of individual freedom, and those nations that believe the contrary will self-destroy.
No, he said that.
Yeah, he said everything.
So there's friction and wars happening in many different areas, right? For example, just getting back to, in our business, we have to comply with anti-money laundering laws. We have to have a very robust process in order to comply with it. Otherwise, we go to prison. At the same time, we have to comply with privacy laws and GDPR, and those are actually in conflict with each other. So I had to choose, as a board, and when we're having meetings with our compliance team, we have to decide what one is more likely, in crypto. Unfortunately, in technology, every year you're not in prison is a good year. Because you have to decide whether you're going to comply with anti-money laundering or GDPR, and they're directly in conflict with each other. And these frictions are going to just get more and more and more, because it came from the internet. When everything went global, that just really messed up everything that was built before that in terms of control within the borders. And all of these different debates, all of these different things are going to be happening. But I'm just really glad that today we have a choice. Our choice is, you can either hold your money in money that you don't own, that you can't spend unless they give you permission, or you can hold your money in money that you can own. And as a society, we have chosen that it's okay that we don't own our own money and that we can't spend our own money. And as a battle that's going to be fought over the next decades, and there's only one reason, because Bitcoin gave a choice.
And so we've got to have these battles, and the important point is choice. Sometimes it's right for me to put money in a bank where I know I've got to explain everything, I can't get it moving because I need some kind of stability, but in other parts I know the money, money in different places for saving. So we live in a speculative economy, and unfortunately you are either going to have, if you do nothing, you are having someone else speculate for you, or you're going to have to get conscious about your speculation and what you do with your money and where you put these things. And everyone has to make that choice because it's being made for you, because we're in a speculative economy and privacy is a central part of that, and that's where this movement came from.
I think what Simon said about GDPR versus AML is great, because it is a great example of the kind of schizophrenia that now we have as a governmental regulation, but also as a cultural awareness about privacy. So everybody is going crazy because Facebook is selling what you're publicly saying about something to some analytical, sort of like Cambridge Analytics about politics. So what we publicly say, like a like, that we want to give publicly about something, gets collected by a platform that asked us to make public everything we do, and we said yes. They are taking that we provided freely, basically, and selling to the third party, and everybody is losing their mind. While governments are actually asking us, what are our grandmother doing with the money that she's gifting us for a birthday? And that's somehow okay. And the same people are forcing us to comply with privacy where it doesn't really matter that much, and they're forcing us to completely give up privacy where it actually does matter, because money is more important than speech. Free speech and private speech, the fact that you can protect your mail is great, because it's important to be able to speak privately, but money is more important, because in a letter you can say you love somebody, but then if you buy a jewel for somebody else, money speaks louder than words. And if you can write to your employee or your insurance that you are perfectly healthy, but the money you spend on medicine for your illness is more important. And everything, I mean, when you transact, that's a kind of communication which is more important, because you cannot lie with your scarce resources. You can only lie with words. Words are cheap. Money is hard. So the thing is that it's paradoxical that regulators now, they want to completely to force weird and kind of useless levels of privacy, creating this monster of privacy problem about really useless stuff like the place you put your like, but they don't want you to stay private about very, very core stuff like how you use your money and your wealth. That, as David said, it may become a problem with government, because everything you do was illegal once and will be maybe illegal once again in the future. But also it's just a problem for ex-husbands, stalkers, haters, competitors. And Bitcoin, this is very nice, because it creates basically a dilemma. In Bitcoin, either everything is public, because if everybody is registered with KYC, with the traceability, if you are just a link of a KYC database, basically you can know everything about everybody if they don't use Bitcoin properly. And so either everything is public or everything is private. And there the choice is, the choice that looks like hard, if we don't think about that clearly, becomes very, very easy. We need privacy. Privacy, confidentiality are cornerstone of civilization.
The market say control today, because if you check the most visited websites in the world, Google, the first one, Facebook, Instagram, and so people like to give the data for the simplicity. I don't know if you use Amazon. It's a curious thing about Amazon. Amazon is producing some Amazon basic things, like umbrella, like with the brand Amazon Basic. There is a reason behind. Basically, they are analyzing what are the products most bought from the users, and when they will be the Amazon Echo Dot or Amazon Alexa, and so the people start to order through the voice like, please buy me an umbrella, Amazon will buy immediately Amazon Basic, without so producing and selling the things, not just selling. And this means that the people right now is giving out all the data that they have today. But with the cryptocurrencies, we have the possibility to let's say, make this kind of revolution. But I think that at the end, the last point will be a middle solution between control and privacy. It should not be full control, but it should not be full privacy too.
Well, privacy is one of the most underrated benefits that a person can have, because if I have to imagine a future without privacy, that is terrible. I mean, you don't want to even consider it for your family, children, relatives, right? Is thinking that whatever you do, every single action that you do can be public and can be used against you is terrible. And it's like thinking that you are a criminal unless proven the opposite, right? Instead, you are a good person unless proven the opposite. So for me, it's privacy all the time.
Okay, so thank you very much. Thank you for sharing your opinion with us.
Before ending this, I would like to come, a few people to come here. Alex is a good friend of mine and is working in the last few years very closely with the organization. Federico is another old friend of mine, but he is the trader of crypto, and I think everybody should know you. We need to learn, and we need people like B Academy that provide the courses for Bitcoin and if this company is going to join as a partner to TerraBitcoin. Stefano is there are good friends. We did some club deals together. He's one of the blogger, most important blogger in the past, now no one with any more blog. But we are working for the future, and it will be an important part of the TerraBitcoin project. He's working hard now to find a good project to invest.
Yes.
And instead, I am, please, if you want to stand up, I am interested in understanding if a day like this was useful to all of you, if you have now the right approach. The right approach, in my opinion, is not to be only a trader of crypto. Crypto is a commodity, but try to do something more. If you really believe in crypto, we cannot stop to Bitcoin. Sorry, Giacomo. But we need to tokenize the economy.
You can also buy Satoshis.
So now, a couple of things. Now, I ask you to leave at the end of the room the headphone for the translation, and we invite you to have a cocktail at the bar of the hotel. Thank you.
All done. I'm still streaming.
All right.
Say thanks.
Hope you enjoyed it. If you want to see more live events, we'll try and do more like it.
Yeah, cool. See you.